All right. So we just had our great panel on the regulatory framework for Bitcoin and developing government regulation. So now we're going to move into the financial and economic realities of Bitcoin, both now and moving forward. And we have our great moderator, Sara Eisen, here to introduce the panel.
Thank you very much, and thank you to our distinguished panel. This is going to be a fun one because for me, I get to talk about Bitcoin every single day. It's in the news. I mean, literally, there's a news story today. eBay decided that they're going to open a virtual currencies category. So I think we'll have a lot to talk about in terms of the value, the investment opportunities, the economics, and the ecosystem of Bitcoin. And what would be great is if everybody could just take a moment, introduce themselves, and particularly how they got into this Bitcoin ecosystem and where they fit in the landscape. Steve, you can start.
Hi, good evening. I'm Stephen Englander. I'm the head of G10 foreign exchange strategy at Citibank. And I got into Bitcoin kind of accidentally. It was a slow week in the foreign exchange market. And we were getting many questions. I think it was the week that Bitcoin went up to 1100, and there were a lot of discussions as to whether or not it was the newest currency on the block. And the question was, how should we look at it? And that was my introduction. I must admit my first paper was, I think was quite bad, but I think they've improved since.
I think it was a bit skeptical.
Well, they're still skeptical, but the basis of the skepticism
Oh,
is
good. So we're
better
gonna
founded.
have an argument on the panel tonight. Go ahead.
Hi, I'm a managing partner at Ledra Capital. We're a family office that has historically invested in higher education and technology. One of our portfolio companies is one of the largest private universities in Europe. And last summer, we started studying it with some of our faculty and came to the conclusion that these decentralized cryptocurrencies, these blockchain-based currencies are actually going to be a very important development in computer science. And so as part of that, we ended up developing the first, I believe, degree program on the topic. So I head the external advisory committee to the university on this program, which is a master's in digital currency. And we are currently evaluating separately from the university some investments in firms that are involved in the space.
And he writes a great blog. Series number 26 on Bitcoin. You can still catch up. Marwan?
Hi, my name is Marwan Forzley. I am independent. I had my own startup called eBillMe, which I founded and sold to Western Union. We were in alternative payment space, allowing consumers and small businesses to shop online and pay through online banking. There's a lot of parallels between the startup I was in and Bitcoin, and that eBillMe was a good funds payment model and a push-based payment model, and so is Bitcoin. And before eBillMe, I was in one of the startups that created the first voice-over IP gateway in the market that sold to Nokia. You know, when we were in voice-over IP, it was really weird to be in that space. It's like, what are you doing, moving voice on the web? It was sort of like a fringe idea. What would happen to the computer if the battery is dead, and how do you deal with 911 calls, and what about the voice quality? And you know, people found everything that can go wrong with voice over the web, and now it's a mainstream thing that you enjoy. You click on the person, and you click on a picture, and you talk. And so it took 15 years to get there, but that's the nice thing about Bitcoin. There's a lot of potential to. Similar to voice on the web, it is something that can move money on the web, the same idea.
Nicolas from ConvergEx Group, based here in New York. We're an institutional broker-dealer, primarily investing and helping clients work in equities. I came to Bitcoin in February of 2013 and wrote some pieces about it, primarily because I was interested in how human trust shapes what we consider worthwhile investments. I do a lot of work in behavioral finance as well as basic economics, and I thought Bitcoin was a great case study in how a combination of the financial crisis and our society's increasing use of technology intersected in the notion that money could be a technological decentralized feature versus one funded by a government.
And I think you were the first strategist to put a note out. Sorry, Steve. But he first strategist to put a note out on Bitcoin. Go ahead, Alec.
Hi, I'm Alex Waters. I first got involved with Bitcoin. Well, I heard about it in 2009 and then sort of followed up on it in 2010. I worked on it with core dev. I was paid alongside Gavin to work on building the infrastructure for the core dev group and doing quality assurance in 2011. 2012, I worked at BitInstant, where I oversaw operations and development. Now I left there, and my partner Yifu and I started a Bitcoin incubator here in New York, and we work on projects that we can spin off as products that build some of the infrastructure for the ecosystem. So that's it. Thanks.
So I guess when you look at the economics of Bitcoin, one question that I have, as someone who covers it in the press every single day, is how on earth you determine the price, how you value Bitcoin. And I think that if you look at the price, some people will say, it's come a long way, it's down from the 1200 or whatever, so it's a total sham, but then again, it's still above 400, so it's not zero. Nick, how do you value Bitcoin?
Yeah, my basic intellectual construct is Bitcoin is a very large venture capital project that it trades 24/7, 365. If you think about why venture capital is private, it's partly because just building small companies takes time and takes energy and takes focus and isn't really very conducive to public scrutiny on a 24/7, 365 basis. So I look at the price as right now a near-term indicator of what society thinks this alternative currency might be worth based on its eventual applicability to a wide array of solutions for society. But I also would tell you that since there's no insider trading on Bitcoin, it's an incredibly leaky infrastructure. And when you see the price move around, you should really pay attention to it because people know stuff. I had two people telling me 3, 4, 5, 6 months ago that Mt. Gox was a fraud, a sham, was going to implode. And you saw the price reflect that, and you saw the price, lift, but then collapse as the news came out. So as with trading any security, someone usually knows before you. I spent 3 years working for a guy named Stevie Cohen, who's a pretty big hedge fund manager. Someone always knows, and if it's not you, don't assume you're right and they're wrong.
It's not you, it's him. How do you approach the valuation?
Look, it's a very difficult topic to asset to value, but I guess I start by trying to prove that it has a non-zero value. And to me, what the price represents is a current expectation of the future uses of Bitcoins and some concept of a velocity of money, how long money will stay in the system. And here's what I mean. When people say Bitcoin in and of itself has no intrinsic value, that's correct. If tomorrow there were no businesses using Bitcoins, if there were no business models built around Bitcoins, the value of Bitcoin would be zero. However, if you can imagine even one usage case that requires Bitcoin, and I'm starting very simply, that let's say it's useful for micro payments to media companies or international remittances. And in order to execute that transaction, you require Bitcoins, and when you require them, at the time that you require them, you don't have any, but someone who has them needs to sell them to you. That's going to create a market, that's going to create a price. You have to induce the person who is holding them to sell them to you. So in a way, I don't view it exactly as a company or a venture-backed company. It's almost like an index fund of every Bitcoin-centric company, but you're not valuing necessarily the equity, you're valuing this velocity of money concept. In certain applications, remittances might have very high velocity of money, so there might be high volume, but the money will come out quickly. Other usage cases, people might hold money in the system longer.
Steve, can't you just correlate it to dollar yen?
I wish, but probably not. I feel I'm wearing four hats here. One is as an economist, another is a foreign exchange strategist, one is an ex-central banker, and the smallest hat I'm wearing is as a commercial banker at Citibank. And I'd like to come back to one of the comments that Ruben made in the first panel, which I'm not sure you were here, where he said, well, what if you linked Bitcoin to the dollar? What if you had dollar coin? You can have pretty much the same blockchain. you could have pretty much, the same cryptography and the same sort of transaction. The only thing you wouldn't have is an exchange rate, and you wouldn't have capital gains or losses, and it came out the IRS chasing you. But the other thing you wouldn't have would be sort of a value, because, there would be a value because of the services that you would perform for your clients. But what you wouldn't have is a sort of speculative component, which seems to be the focus of the market. Is a Bitcoin going to be worth 4 cents, $4, $400, or $4 million, which some people believe. And it's kind of interesting. Last night I was flipping through some of these Bitcoin sites, and I think it was one of the largest sites which offers to facilitate transactions. And the first thing that they say is, we can guarantee that you won't lose on Bitcoin. We'll take 1% of your transaction, but basically we'll take you in and out of Bitcoin, and you won't take a capital loss. So they're kind of like a mini credit card company, but it's clear that there's sort of a revealed preference out there for, at least on the business side, not to have that kind of exposure. And I think it's very easy to avoid that kind of exposure if you go the dollar coin route. And you say, look, yeah, it's a way of avoiding fiat currencies. What you're doing is avoiding, all the, terrible things that central banks have done, commercial banks have done. But let me, ask you to look into your souls, right? The most stable currency in the last 50 years is probably the Swiss franc. How many of you care enough about currency stability to own some Swiss francs? I mean, has it ever been a priority in your life to sort of get out of dollars and get into Swiss francs? So I'll leave it at that. I mean, the question
It would
of
have been a good bet.
what the value is. Well, you're different. But the question of, what is it that's intrinsically valuable in Bitcoin? Is it that you're going to become a godzillionaire, or is it that you're going to be able to do transactions cheaply and easily? And if it's the second one, I'd say the value is undefined. There may be some minimal value, but I suspect that what you're going to see is for convenience sake, the people get rid of the intermediary of Bitcoin and just do dollar coin or euro coin, and once in a while transact between them.
You have skin in the game. Does your incubator promise no losses?
No, in front of all this legal help, I would imagine that my attorney would tell me to say no to that kind of question. We strive to protect consumers. One of the major issues, I think, is that you have this startup mentality being applied to a financial space. So the ethos is move quickly and break stuff, according to Zuckerberg, and that doesn't really apply. And so we see things like an exchange like Mt. Gox, where it's a clearinghouse, a depository institution, it's self-auditing, and in traditional models, that's more modularized. It's broken out into separate entities. And I think that's part of the reason why we're seeing this leakage, why we're seeing losses and hacking and all that. And I think the course of action that we have to take going forward is to reduce the scope. So if we have a depository institution that is transparent about what it does, it takes value and it protects it, and is insured for that, ultimately people would feel a lot safer and confident in Bitcoin. But I think as it stands currently, that's a major issue. The idea that you can't put money in it and think that it's low risk. It's extremely high risk. And I would say if you're looking for low risk investment, maybe invest in another currency like the franc. But Bitcoin is not it for you. I think ultimately though, the underlying technology can push it further than those state-backed fiat currencies. It's really the first non-fiat currency, and I imagine there's some people that would argue with that, but realistically, we've never had an automated system, essentially a robot that lives on the internet that controls a currency. It's always been left up to individuals or organizations, and so there's intrinsic value in that. And people get focused on the currency aspect of Bitcoin, but really it's just a feature. This idea of a decentralized public ledger is completely unprecedented, and I think it is of the gravity of the internet as far as how it will impact the world over the next 20 to 30 years. And we get focused on the currency because it's at the forefront and it's interesting. I'm long on Bitcoin because I think the currency is a feature that will remain. But the greater things that operate underneath the sort of surface that not many people are exposed to, I happen to look at it every day, is of a magnitude that I really can't express as far as how big of a deal it is. Yeah. So I don't know if that answers your question. I kind of got off track. Sorry.
It's good. I think a lot of people want to weigh in.
I just wanted to mention that Bitcoin is a network, and so the network has a utility, and the more utility, the more valuable. So when money goes into the network, if there's no way for money to be spent on the network, the value of the network reduces. And so it's very important, you got this chicken and egg issue, it's very, very important that there's applications that sit on top of Bitcoin that allows people to spend their Bitcoins so that you get velocity and money coming in and out of the network. And that's essentially what creates value on that underlying infrastructure.
So it seems like there's a lot of opinions. Is it a currency? Is it a technology? Is it a payment system? Is it something bigger?
Can I ask Stephen a question?
Yeah, go ahead. And feel free if you have a question to raise your hand. This is very interactive.
I've been waiting to ask him this question since I saw we'd be on the same panel. I actually agree that, and I forgot who asked it earlier this afternoon, a dollar coin is doable. I believe it's doable. You could launch a cryptocurrency. It could be inflationary, but its lower bounded value would be backed by dollars because the Fed could, and only the Federal Reserve could do this. Any private party would have counterparty risk. So I agree with Stephen that if you had all the features of Bitcoin, but no volatility relative to the dollar, most people would find that a more appealing way to do these types of transactions. But my question is, what is a realistic time frame? I mean, today you have transactions that can happen in Bitcoin that are unique and new, and a Fed cryptocurrency doesn't even seem within the realm of possibility in the short term.
Well, I think I can predict it to the minute when the Fed will get interested. Because if you think about central banks, there's this thing called seniorage, and governments benefit from it, which is the idea that when when the Fed creates a dollar, it's sort of the government's the first one to spend it because they get all the profits from the Fed. Now, there's a battle going on here between the people who bought Bitcoin at a fraction of a cent, who, if Bitcoin takes off, it will increase the money supply, and they will become very rich off the seniorage. And the central bank will one day turn around and say, wow, this isn't working for us. And the government will turn around and say, wow, this isn't working for us. Right now, this is like a mosquito, a little fly speck or something in the central bank radar screen. But ultimately, it's really an issue. And I'll point out, you look at China. For a while, it looked like China, didn't care. They sort of, you had all these Bitcoin exchanges. And it's probably the Chinese trade that drove Bitcoin prices up to $1,100, $1,200 a Bitcoin. Then as soon as the government decided, wait a second, this is actually bothering us, they smacked it down. And I think as soon as any government decides that, look, this, we would rather be rich than, a bunch of technology geeks being rich, they will smack it down as well. And they will come up with an alternative because I think that everyone who has looked at it thinks that there are very attractive features in the Bitcoin technology, but it's going to take a very different form, I think. And so that's the answer to your question. As soon as it becomes significant, it's gone.
I think Nick also wants to address it.
There you go. Yeah, there's already a dollar Bitcoin. It's called a $100 bill. And the $100 bill just got redesigned by the government at some $120 million worth of cost. And the primary users of $100 bills are not US citizens. 80% circulate overseas. And the primary users are tax evaders, drug traffickers, arms dealers, and human traffickers. That's who uses hundreds. When you Google drug bust, you don't see Bitcoin thumb drives, you see stacks of hundreds. Now, even the Europeans, when they started the euro, didn't print 2 and 500 euro notes for the first 7 years of the euro experiment. They started in 2008 because of the seigniorage issue, precisely, because it's very, very good money. The US government, the Federal Reserve and Treasury, make on the order of $200 to $300 billion a year just printing hundreds. And there's tremendous demand for it. Not only do you have an increasing demand for hundreds all over the world, but the 2 and 500 euro notes are in great demand as well. So I think your point is exactly right. When you start messing with the government's ability to make money on seigniorage, which is sizable, then they start being very concerned. But Bitcoin in dollars is called a Benjamin.
Go ahead.
Sorry.
Yeah.
I just want to talk about this a little bit. We have this experiment playing out in Iceland right now. Effectively, the government is having currency issues, or the people there. And so they did this airdrop thing with Iceland. And in the course of, I just met with Johan, and he tells me that in the course of 2 weeks, 9.5% of the population is now using Aurora Coin in 2 weeks. So that's extremely concerning for the government. And I think from a global perspective, this is a really interesting experiment to see how this plays out, to see what happens when a nation decides we'd prefer to use a cryptocurrency than a federally backed currency. And I think there is tremendous value there for government. Yes, they will be losing money. Yes, they won't be able to inflate their currency. But there are pros and cons there. And just as much as the internet probably was a net, I guess, I don't know if a net loss, but it changed how the government had to act. It was definitely a net gain for humanity. And I think likewise cryptocurrency is the same. But the pro to them is that it's fully transparent. That's good for us too as citizens, but for the government, having a fully transparent commerce system really allows them to go after the bad actors and specifically go after them without putting the cost of going after those bad actors onto the general populace. So I think it's a net gain on both fronts.
I mean, it raises the question about regulation. Increasingly, you have a number of different regulators looking at it, trying to figure it out, trying to put some kind of law on it. Is it moving in the right direction, Marwan?
Well, it's money, so and it's your money, and you don't want to lose it, and so the government, not only the U.S., all governments around the world will put some form of regulation to protect the consumer from bad actors. I think it's important, though, for governments to do things based on the context and the application and the use cases, so that it's not one size fits all. There's different flows of money, so consumer-to-consumer transactions are very different from consumer to business, very different from business to business. If you're sending $1, it's very different than sending $10,000. So I think it's important for the government and all the regulatory bodies to think of the use cases and moderate based on the various use cases instead of one size fits all.
What do you think, Antonis? I mean, you follow all the different regulations around the globe, the different agencies here.
I think I think what you'll end up seeing is developed open economies will come out with reasonably sensible regulations over time. Economies with capital controls, like China, I don't think can accept Bitcoin while they have these capital controls. It would make a mockery of their fundamental currency management structure. So overall, and I'm squarely in the camp of people who believe the regulations in aggregate are good for the currency and for the firms operating in the currency. I've spoken to several lawyers the last few months in New York who say their number one question from their corporate clients, not the Bitcoin companies, but big Fortune 500 corporate clients, is this legal? Right? Forget all these other advanced questions we have now about the blockchain and its value, but am I going to get in trouble for even using it? So to the degree that structure comes in both from the AML side, the KYC side, and then the tax side, I think it's helpful. Is the regulation perfect? No, it hasn't been perfect, but particularly in the US, I've actually been very impressed that there has been a willingness by the regulators and the governmental bodies to engage with the community. It's You know, we have operations in Europe. Europe's significantly behind. They're moving at a slower pace.
And I guess, Steve, there's no role for the Federal Reserve here. It's under the Treasury?
Well, I mean, it's not clear why the Federal Reserve couldn't keep the blockchain. The question is who are you going to trust? I mean, and many people don't trust the Fed, but central banks already do a lot of they already do a lot of things in the financial system, and their security.
I thought you were skeptical about Bitcoin. You're sounding very supportive among this group.
Well, you see, I'm skeptical about it being an asset class, and a store of value. What I'm not skeptical about is its use as a transactions vehicle, because I think it's going to be great for, Filipino workers in Abu Dhabi who want to send money cheaply home, right? Their wives will be able to access it at much lower fees than is the case right now. But, is it the new gold? Is it the new Beanie Baby? Is it the, is it the new S&P? That's why I'm very skeptical about, because I don't, it's basically a reputational equilibria, and the most fragile thing in economics is a reputational equilibrium, because there's nothing backing it.
What do you think, Nick? I mean, what is the next step? Is it going to burst out into the mainstream? Is it going to be a Beanie Baby type investment, or just technology?
Yeah, I mean, I think the most important thing to realize about Bitcoin is this is a very fragile system, as was noted. I think it's an excellent point, and one you definitely should take home with you. The chances are excellent it won't work. That's sort of the bottom line. The chances are good that with smart folks, working on it, that you can get something out of it, but it's far, far from assured. I spend as much time thinking about the one headline that could kill Bitcoin as the 15 that could push it higher. And I would tell you the one headline I think about constantly is Bitcoin thumb drive found in Karachi Al-Qaeda safe house. You see that headline cross the tape, sell it all, we're done. It's not going to recover from that, because, as you said, reputational equilibrium is so important. And if you get this tied directly to terrorist financing, which I'll tell you, I was in Kabul literally on vacation last June, and everybody under the age of 25 has a cell phone and is remarkably technologically literate. So don't think that just because it's hard to get, power in Kabul that any of this is impossible. It's actually very likely.
Go ahead.
Oh, I'm going to have to disagree pretty strongly with that. The nature of open systems like Bitcoin is that they're almost impossible to kill. If you had asked us in October, what would happen if the Chinese effectively banned Bitcoin and the largest, most established exchange allegedly stole all their customers' money, one would have imagined that's pretty much the worst case scenario in the Bitcoin economy. And as far as I can tell, entrepreneurial activity is continuing and accelerating. Venture capital financing is continuing and accelerating. It is the fact that no one can go shut down the Bitcoin company is a tremendous, tremendous security enhancer for someone who says, I'm going to invest in developing a company or a service based upon it. And the history of these networks is that they go through tremendous ups and downs on the individual company level. If you remember, go back and read the articles about the internet in the early 90s. It's not going to scale. It's going to be replaced by the better governmental version. It's the warm-up for the information superhighway that the government's going to build. There's security problems. There's fraud problems. There's people who are going to publish without a central editor. And every year, we keep hearing how many problems it's going to have, and it just keeps growing. And the reality is Silicon Valley, and not just Silicon Valley exactly, quite frankly, the most innovative thinkers in Silicon Valley are more or less all in on this technology.
Why?
It has every marker of a network, a decentralized network business, technology that has been effective in the past. You listen to Mark Andreessen speak about it, and he says he's seen 3 technology revolutions in his lifetime. And the first was personal computers, the second was the internet, and the third are decentralized Bitcoin and decentralized blockchain technologies. It's very easy to get caught up in, is there negative publicity? Did the price go up and down? I consider these things utterly and completely irrelevant. The blockchain for Bitcoin is the most secure asset ledger that has ever been created in the history of the world. You do not have to trust any central party. Doesn't matter if you think a central party is good or bad, you don't have to trust one. There's 250,000 copies around the world. It means a transaction recorded in there is more likely to persist into infinity than a transaction recorded in the broadest, most credible US institution. You look at the financial services industry, something that looks robust, Lehman Brothers circa 10 years ago, and it's no longer in this world. The blockchain transactions, it's hard to imagine what type of societal calamity would need to happen to erase those off the planet. And it's not going to stop with currency. It's going to go across every other transaction or asset ledger in the world. Title deeds, securities, your rental car keys, the keys to your hotel room, all of these, which might not have huge economic value, but have actual operational value, will be implemented in blockchain-style technologies. So I don't know what a Bitcoin is going to be worth today or tomorrow. I actually don't particularly care, but I'm very comfortable that this isn't an idea that's uninventable. The first time I really understood this, I was sitting on Saturday afternoon, a couple blocks from here, 2 o'clock, talking to the CFO of our university in Cyprus. It was 9 p.m. there. And I had the Bitcoin client open, and he had the Bitcoin client open, and I sent him $20. And 3 seconds later, he had $20. And here are all the things that didn't happen. Chase saying, oh, it's Saturday, we're closed. Well, process it on Monday, it'll get there Tuesday. The Bank of Cyprus saying, oh, well, I'm going to take a transaction fee also Chase, and what's your account, and fill out this form. It was instant. It went around the world. It cost half a penny. It's one of those feelings that you have when you first send an email. That, sure, in 1993, email involved putting a modem, getting the ports all wrong, connecting. It's slow. It's really actually would have been faster to send a postcard in your, walk down the post office and send the postcards probably. But once you send an email, you realize, okay, the post office isn't going away, but you'll also send a lot more emails in your life. And once you use Bitcoin like that, it's very hard to imagine a world where we come back cumulatively and say, well, that was great. That's really amazing that we can now transfer small and large amounts of value instantly around the world. Let's just forget we can do that and go back to how things were before.
Wow, that was quite a prediction. You've seen a number of payment systems in your day. You've worked in this business. I mean, do you see it as that kind of transformational?
So the other way to look at it is if you look at the history of the web since the web was created, the first thing we did is we moved information on the web, and then we moved telephony, which is voice on the web, and now we're moving money, and then ownerships of things in general. I think also if you look at the history of payment systems, every single one of them, whether it's the wire or the checks or the credit card systems, they're all been invented before the internet. Even PayPal, which is the most modern network, is actually a wrapper on top of existing payment schemes that have been invented in like a long time ago. So what's interesting about Bitcoin is that it's natively digital. It was created with the web. Now what's also most interesting with Bitcoin is to find ways to use it in applications where you cannot do with the existing payment schemes. That's really where it starts to shine. I can move money from here to Cyprus, but I can also use PayPal. If you find a way to use Bitcoin to do something really unique that you cannot do with the existing payment schemes, this is where it really becomes very interesting. So back to voice over IP, first when the industry was created, why do I need to remember your phone number when I can click a picture on you and call you? This is a fairly interesting application of voice over IP that was different, something that you can do that you cannot do with the black phone. And so that's the thing that's really neat here, is to find ways to use the new technology to shift the economics for the merchants or the businesses and to do something totally new, something that you cannot do with the existing payment schemes.
Well, I mean, Alex, you can speak directly to this. I just wonder, what are your biggest legal challenges right now in terms of making it, what they're talking about, such a transformational, sort of ubiquitous fact?
Yeah, um, I agree wholeheartedly with what's been said. Effectively, the position I'm in is I'm somewhat standing on top of this thing and looking out, and I can see stuff like as if it were the internet in the 70s, like text messaging and voice over IP and smartphones and Facebook and Pandora and all these great concepts. But instead they're like decentralized autonomous corporations and fully transparent organizations. And for the most part, we spend our energy thinking about Bitcoin and discussing that because it's at the forefront. But there's much greater things to come. And it's challenging to both address the due diligence that people are doing, the skepticism they have, but then also try to get people to work on well, to get past that point of learning and the education and get more to the point of we need to start building the story here, because if it gets totally banned, or if it etc., it's just going to get pushed to the black markets. It's going to get pushed to nefarious purposes, and this is something that is extremely powerful. I mean, the internet is a means of communication, but effectively money is what enables revolutions to overthrow governments and terrorists to attack cities. It's important, and Oppenheimer, I'm probably paraphrasing, said if you birth technology into the world, you're ultimately responsible for it. And so the challenge is to get other people to see it as this is something of such great magnitude, and get past the point of convincing them that it's important, and get to, okay, what can we work on? And creating that dialogue is challenging. But also from a legal standpoint, we have to jump through a lot of hoops as startups, and financing, equity financing helps a lot. But what we do at the incubator, we look for people who believe in the greater concepts, because we can't afford to hire the best counsel. And so I hope that a bunch of young minds, if they're interested in this and find it curious, would devote some time to it, because it's more of a humanitarian effort. It's more of a working on the internet in the 1970s. I mean, it's cool. It's fun, and there's money in it at some point.
I think he's soliciting the audience. Questions? Yes.
I'd like to return to the very first question that we asked in this panel, which is how do we value it, and add in, when it was just Bitcoin, I agreed with all of what you guys were saying about how to think about it, but then we add Litecoin, Aurora Coin, and then 50, and then 100, and then eventually 1,000, 20,000 other cryptocurrencies, new ones every day. How should we think about that in terms of how that affects the price? And is there eventually something that is, exactly the same as Bitcoin, except, instead of Satoshi Nakamoto, it's Nakamoto Satoshi, and that he becomes more popular? I'm interested in what you guys think.
So I'm sure there's I don't know how many, I think over 100 already of altcoins. Yeah. So in this business, network effects is everything. And so there's going to be maybe 1 million, but it's winner take all. And Bitcoin by far has the largest network effects. And unless somebody comes up with something that's radically different and has 10 times magnitude power than what you get from Bitcoin, I think Bitcoin has the largest awareness in the market globally. And all the applications are primarily being built on Bitcoin. So that's my point of view.
Go ahead, Steve.
I mean, to some extent, this sounds a little bit like a Michael Lewis book, where you find sort of the guy who figures out the puzzle, like the guy who was skeptical about derivatives, or the guy who was skeptical about high-frequency trading. And you write the book with 2020 hindsight, and you sort of say, oh yeah, I still have my CompuServe account. I think, their networking effects didn't do them that much good. I think I still have my original Netscape account somewhere. When you talk about networking effects, I think you have to be careful, because undoubtedly they're there. There are economies of scale. There are, first mover advantage. People have to sort of climb a wall to get into competition. On the other hand, you have to also ask yourself, the question, if you look at Bitcoin, I think the historical context from, Satoshi Nakamoto, he wanted something that was outside the financial system, was anti-fiat money. He was doing it in the aftermath of sort of Lehman's and, possible collapse of the financial system. How many of you are, again, asking a question, how many of you are obsessed with that issue right now? I mean, so much so that you've actually done anything about it. And so in a sense, if you start up a currency with the intention of being outside the financial system and being decentralized, what are the odds that whatever benefits, advantages that currency has, you're actually optimizing them, because you're solving the wrong optimization problem for most of the world? So, it's possible that being the first mover will give, Bitcoin tremendous advantages. But it's also possible that, some of the other coins, Litecoin, Reddit, some of the guys are kind of saying what works with Bitcoin and what doesn't work with Bitcoin, that they will take over, just as we've seen many first movers overtaken by second movers and third movers who sort of solve the problem that they were addressing better.
I'd like to talk a little bit about network effects, because they come in layers. So social networks are one-sided. You go where your friends are, and they're decent network effects, but they can break up fairly easily. Then you have two-sided markets. eBay, Craigslist are canonical examples. Craigslist is notoriously terrible UI. It is still in place and the dominant in its space. I don't know how many business plans I've seen, the eBay for this, the eBay for that, eBay with this better feature. Well, it turns out that eBay for all those things is in fact eBay. Bitcoin is actually probably closer to a 4 or 5-sided market. So you have consumers and merchants. So the merchants are going to adopt the processing for the cryptocurrencies that people hold, and people will shop with the merchants. So that's similar to an eBay or Craigslist, but it gets a little bit more complicated than that. The security of any cryptocurrency is based on how much computing power the miners have put upon it. So something like the vast majority of the altcoins, and this in fact happened to Aurora Coin, are vulnerable to someone implementing a 51% attack, which means you can destroy the integrity of the transaction ledger. On the computational side, nobody's even close to Bitcoin, and the way it works, the more valuable the currency is, the more miners it draws in, and the more computational power it pulls in. So that becomes a pretty hard metric for a new cryptocurrency to break into. But it gets worse. The real cost in using a cryptocurrency isn't the transaction fee, it's the liquidity towards traditional sovereign currencies. So now you add a fourth issue of how liquid are the exchanges between any given currency and dollars or euros. Even Bitcoin is a rounding error of a joke today. If I'm not mistaken, we're looking at about $100 million of daily volume. Traditional markets are a few trillion, if I'm not mistaken, in the currency markets. Some of the altcoins...
5.4 trillion a day, right, Steve?
Yeah. Some of the altcoins have a total monetary base of $20-30 million. There's no liquidity there. You can't actually use them. So I'm not saying for sure Bitcoin will be the dominant cryptocurrency forever, but will there be a dominant cryptocurrency? There's no doubt. There's no doubt. There is, just like you've seen in any other multiple-sided markets, it tends to be a winner-take-all game.
I'll give you the practical. How many of you use Tor? Okay. How How many of you know what Tor is? Okay, cool. So the way I monitor this is I go to Tor and I go to 5 or 6 pot websites and see what currencies they take. And when I see more than Bitcoin, I'll start worrying about Bitcoin.
What's Tor?
Oh golly, probably these guys can tell you better. But basically, Tor is just a back door to the internet. Only 1% of the internet is searchable, 99% isn't. And Tor helps you get to the dark web, where Silk Road existed, where Silk Road 2 existed, and where all the drug sites live. So once you get there, you can buy whatever you want. It's very secure. I'm not going to say any more than that. It's a very secure process. And provided that you know the website you're dealing with, it's a very easy way to buy illegal drugs. And Bitcoin is by far the most preferred way to go about it. It's very secure. You know, it's without endorsing it, it's very easy to use.
Okay. Did you want to?
Yeah, can I just?
Yeah, go ahead.
So Antonis addressed it sort of on a financial, economic standpoint, but from a technical standpoint, what we've seen with protocol-based systems, things like TCP/IP and SMTP for email, is that you have this sort of underlying protocol, and then you have all these competing layers that sit on top of it. So you have the various different web browsers, and so you have Google competing with Microsoft and so on and so forth. But underlying that is at the low level is the same technology, I think we'll see that with Bitcoin, because not only is it protocol driven at a low level, but it's completely open source and open to contribution. So one argument is that it could be attacked. People could move to a fiat based or a state controlled cryptocurrency. I don't know what that would look like. That would be pretty complicated. I don't think that that's too realistic. Maybe as an experiment. But another thing is that a feature-based advantage would develop, whereby, let's say, Dogecoin is really awesome at doing something, which is them proposing a different protocol effectively. If the group consensus of people who contribute to Bitcoin agree that there's an advantage to something that protocol is doing, it can sort of be brought into the Bitcoin protocol. It's a living code base. It's adaptive, and we've seen it evolve. It's at version 0.9 right now, I believe. And every step of the way, you have a group of really, really smart people working on what features do we want to add, yes or no. And a lot of those ideas do come from the altcoins, and they're important in that they do research and development for the Bitcoin core. But I agree with Antonis in that I think there will be a dominant market player as far as the protocol level.
Can I just add a clarifying comment as well? I do think that there's going to be a whole lack of currencies created. I think there's going to be a difference between niche ideas versus big ideas. I think Bitcoin is the mother of all of them. There's going to be a whole whack of small ones, but they're going to be very specific to solving a very specific problem. But the underlying foundation is the Bitcoin protocol. And I think it'll be interesting and important because it took so long for the government and everybody else to understand what Bitcoin is. The more all currencies that are created, the more confusion that there's going to be in the market. So I think another way to do it is to find ways to take the main Bitcoin protocol and see if you can create offshoots of it that's sort of right on top of the foundation. It's easier for everybody to do it that way.
We have a question in the back.
Sort of jumping off the last question and going back to the first one that started the panel, it seems pretty clear that there's two questions that anyone trying to value Bitcoin have to answer. One is whether or not the Bitcoin model will ever actually work, the blockchain, the distributed ledger. And the other is whether Bitcoin will be the one that actually takes off. If either of those answers are no, obviously Bitcoin is not going to work out. But if some alternative takes over, the question is, what is the value of having a distributed ledger which takes advantage of the security of cryptography, also has the benefits of automation, is much more transparent than traditional ledgers. Anything done on it is recorded there. What kind of markets would that open up if that existed? You know, the most obvious one being replacing international transfer services and that sort of thing. But how valuable is that, would you say, just on its own as a concept?
Anybody?
I think that's a very good question. And, you know, the answer may be that it's not very valuable. I mean, because partly if you look at it from a social viewpoint, the question is how much security can you have from, say, having the Fed keep the transaction ledger, or someone who puts a lot of resources into doing it, or say you have, you know, 15 institutions keeping the transactions ledger. Do you really need 250,000 institutions keeping the transactions ledger? And you know, and that goes back to the question I asked earlier about the origins of Bitcoin, which, you know, where decentralization was at the heart of the sort of Bitcoin innovation and the you know, libertarian ideal. And, you know, most of us don't care about that. And the question is really, what is cheaper? Is it cheaper to have 15 or 20 ledgers that you really guard carefully with the best technology, or, you know, basically the 250,000 guys sitting there mining and actually wasting a fair amount of resources if you need one less than 250,000 in order to guard the ledger? And my guess is that at the end of the day, we will find financial institutions offering the core of what the Bitcoin technology, you know, what the innovation is in terms of transaction services, in terms of security, but without the baggage, so to speak, that, you know, comes from its origins.
If I'm not mistaken, the payments industry is about $500 billion a year, and they're primarily transferring information, something that's fundamentally free. So I suspect that, and no offense to the gentleman to my left, the money center banks have a very lucrative franchise right now. And this reminds me a little bit of what we'd hear from AT&T in 1993. Voice over IP will never be of the same quality than a centralized thing. That's why it costs $2.50 to call Italy per minute. There's a lot of things that might be better in the traditional system, but it's not going to be cost. I suspect we will see, this is already, even with the very immature institutions we have today, very immature, with very illiquid markets, with high spreads, with low liquidity, you're seeing payment processors offer merchants 100 basis points, full processing, hedging back to dollars, versus 2 to 3% where you see in the Visa and MasterCard overall system. Visa and MasterCard have 68 and 65% EBITDA margins, respectively. That's not a sign, generally, of an open competitive market. That's the sign of an oligopoly. So I will be very surprised if the conclusion we reach in 1 or 2 or 3 or 4 years is that a blockchain-based technology is more expensive to operate than the current system we have.
I think
Just a two-handed intervention for the gentleman on my right. I think he's absolutely right. And you know, but that's the nature of technology. You do something cheaper, and the people in the business either adapt or they one-up you in terms of, you know, being able to do it even cheaper than you're able to do it. And I suspect that the you know, not having the 250,000 replications of the blockchain, that, you know, possibly 50,000 of those or 150,000 of those are unnecessary. But I think that's going to be the outcome. Basically, that that there's going to be a battle. It could be won by existing financial institutions. It could be won by new institutions. But the basis of the battle isn't going to be Bitcoin, you know, as it stands today, versus, you know, MasterCard or Visa or you know, whatever payment services, you know, Citi offers. It's going to be who takes the best of those innovations, makes it cheaper, and offers the best value to businesses and households.
Marwan, I know you wanted to weigh in.
Yeah, so there's actually a chapter to learn here from, again, telephony on the web. When it first started, the first application was long distance telephony because they wanted to reduce cost. But it turns out that actually it's really the first one then there's really new things you could do with voice over IP, just integrating that into the web. And think of Skype, where you click again on somebody and you make a call, or you group a bunch of people together on a video call, or Google Hangouts, or all these technologies that integrated information and telephony together. I think the blockchain is a really neat innovation, but like any other innovation, it's kind of like in its first public uses, and it takes a long time to harden a product, and so it's going to go through up and down, and features will be added to make it hardened as volume starts to build up, and eventually it becomes rugged, but it's going to go through a bunch of rocky phases to get there.
Question?
Hi. Alex, you mentioned at one point decentralized autonomous corporations. And I love the shorthand DAC. It sounds real tech-friendly and cool and futuristic. But I've heard another explanation of DAC, which is decentralized autonomous communities. And that's actually, I think, what the Bitcoin wiki right now has as the entry for DAC. So my question here is effectively, and I'm diving in an opposite direction. Instead of looking at this between AT&T versus Google or someone doing VWAP, what if we look at this as not even a kind of innovation that's going to come from a normal VC-funded corporation or startup, but rather innovation that, like the Bitcoin protocol originally was, comes from anonymous or pseudo-anonymous people collaborating online to develop open source software? Do we think that there's actually real profitability for these, purpose-built entities to go out there and develop in the Bitcoin arena? Or is this something that could actually mostly happen from user innovation? After all, they are self-incentivized. If you're a user that develops a killer app with your open source community, you are elevating the whole Bitcoin ecosystem. You're probably also a big holder of Bitcoin. It sounds like you're already self-funded and self-incentivized. So my question to all of you is, what role do you really see for VCs here? Is it possible that this could be different?
I'll tell you, some of the more interesting conversations I had with people were right after I wrote my first piece in February of last year, because I got 15 or 20 guys in shorts and flip-flops walking through my office all summer long saying they had made anywhere from $10 to $50 million and some as much as $200 million mining Bitcoin. And I said, what are you going to do with it? And they said, that's why I'm here. I don't know. And I really expected the industry to bootstrap.
Go to tour.
Yeah, it's a new thing now, isn't it? I really expected the industry to bootstrap itself more quickly. And what I found was that Bitcoin miners aren't necessarily sort of the core VC population. So I think it'll come, but it's been slower than I thought it would be.
So I met a guy today who's a miner who told me I'm a VC because he had so much money and he's investing. But there's a difference between money and help to build a company. And so VCs give you money, but they also are well networked, and they open doors, and they've seen the ups and downs of startups, and that's valuable, more valuable than the money part.
Anybody else on VCs?
So yeah, it's coming from working on open source technology. That community. There's this great divide that's existed between the open source movement and the proprietary, Microsoft versus Linux or et cetera. And I think in my experience and somewhat of what has become of it is that proprietary interests as well as open source community-driven interests are mutually beneficial. And I think that having centralized systems coexist with a community of open source contributors is a healthy dynamic, and that the two shouldn't be pitted against each other. That's just inefficient. In fact, a lot of the big companies now open source their technology and allow people to develop on their platforms, and equally they co-opt or use open source developed technologies such as Google Android or Apple iOS is ultimately built off of a version of Linux or Unix at some point. So I think those two intertwine, and I think VC and capital can sort of help shape the story, and you know, there's varying needs of this ecosystem, and I think open source development as well as VC-backed companies can fill separate needs and also work on things together. So I think both are important.
Any other questions? Go ahead.
Hi there. So I was at, or I wasn't at, I watched online a discussion that went down in Washington, a think tank event, where they talked a lot about M-Pesa, which I don't know if you're familiar with it. It's the Kenyan currency. It's not a cryptocurrency, but it's a digital currency. And the real surprise is that this took off and was enormously valuable because it was able to help people who could otherwise not transfer money very easily between, say, cities and a town. One of the things that I've heard mentioned a lot also is Bitcoin helping the unbanked and with remittances, all of which seem to be issues that are solving the problem of money transmission using relatively poor communities. And I'm curious if you have any comments or thoughts, because despite that being a big talking point in the regulation of Bitcoin, I haven't heard venture capitalists talking very much about it or business talking very much about it. So I'm wondering if you think there's opportunity there, and if so, is it being chased down? I just haven't heard of it. You know, where is it? Thank you.
Go ahead.
I think it's early for that. I think the next couple of years are going to be infrastructure building. Remember, there's still today in all of the US and EU not one institutional grade exchange. So if I think about what has to happen over the next couple of years, you need multiple institutional grade exchanges, at least per currency zone. So people have, you know, if you're going to say, I'm going to do remittances to the Philippines, you still have to find some way to change out of dollars to be able to pay your rent, which you're not going to be paying in Bitcoin in the Philippines anytime soon, right? So you need the exchanges there. You need more intuitive and safer consumer wallets. I'm fairly technical, and I've tried most of the wallets out there, and I'm still semi-concerned I'll mess something up and lose my Bitcoins. It certainly wouldn't be ready for my parents, who are smart individuals, but of probably average consumer computer capability, in that, you know, they're perfectly capable of deleting their vacation photos. And that's fine for their vacation photos. It's not okay if they actually have, you know, they're trying to send $2,000 somewhere. And the third thing, the regulatory tax environment needs to clear up. We're making progress there. I don't think it's finalized, and the tools certainly aren't there to help make it easy. So even if the IRS guidance stays as it is, I expect we'll see in 2, 3, 4, 6 months series of software that will automate calculating your capital gains and losses. Once all this is in place, imagine you have liquid exchanges, you have easy-to-use wallets, you get international remittances for free. Like, I mean, you don't have to go build a business for international remittances. It will just happen. If you have an easy-to-use wallet, and I'm in the US and my cousin's in the Philippines, I can just send them money. You don't need to rebuild Western Union. What you have to do is get the actual underlying infrastructure right. And so we're not ready even for the early adopter in the US. In my opinion, it's still like pretty bleeding edge in the US. By the time workers in the Philippines, it's at that level, at least I think 1 to 2 years.
Steve, did you have something?
Yeah.
Oh, sorry.
Yeah, just one thing. Sorry. I think that's the greatest thing in the world. I mean, you know, the ability of, you know, poor people to transfer money efficiently and, you know, not get a big cut raked off by the, you know, whatever, the bank or the money transfer company. It's not quite the green revolution, but it's something that will make their lives demonstrably better. And, you know, in a sense, that's what we all want technology to do, you know, notwithstanding the issues of the person buying his World Cup ticket in Brazil, or, you know, it doesn't quite rank, I think, with enabling, you know, the poorest quartile of the world to actually keep a bigger chunk of the money that they've worked for. So, you know, I think it would be a tremendous thing.
So we actually worked on that. Basically, in sub-Saharan Africa, you have a ton of people who have 2 cell phones each, but none of them have a bank account. And so they barter their farm goods for other goods, or they use mobile minutes. That is effectively their currency, because their fiat currency there is not good. It's hyperinflated, or it's just easily attacked, etc. And so you have a bunch of people who could really use a bank account on their phone, and they're already using mobile minutes. So something I worked on was this thing called Bitcoin Wireless, which effectively allowed you to buy wireless prepaid minutes with Bitcoins. We ended up shutting it down. It was at my time at BitInstant because it wasn't our core focus at the time, and it was ahead of its time. But the traction it got was pretty impressive, and I do think that there will become, we can build it now. The problem is I have to work on like 30 things, and it's a challenge. So
That's your next step.
But
We have a prop.
Doable.
Oh my God, $100 trillion from Zimbabwe. You just have this in your wallet?
In foreign exchange strategy, you never know when
I
you'll be
have this.
called on.
I have it in a frame, actually, in my home. There you go, the inflated dollar. So you should go to Zimbabwe. Did you want to say something?
In general, the hardest thing about these things is timing. The biggest problems to solve are not in the US. The US is actually a very efficient market, very efficient payment systems here. The biggest problem are all international. But the reality is, it's just not there yet. There's just so many foundational things need to be in place before you can really do stuff more efficiently international.
Well, I think we're in the final few minutes, but I guess my last question to all of you is, you're obviously all experts on Bitcoin and you've done a lot of work studying it. Are all of you invested in it? Are any of you invested in it? Alex, we know you have investments in it.
I have a couple coins. Yeah. I've done mining, and I invest in Bitcoin companies with Bitcoin occasionally. Don't tell the SEC. No, but it's before we knew that wasn't okay, and I've since made that all right. But anyways, I shouldn't have said that.
You can just press the off button on your mic.
Yes, I do invest in Bitcoin.
To you?
I'm probably the typical Bitcoin user. I was given 0.1 of a Bitcoin and promptly lost it. So it's out there somewhere, but I have not purchased any more because I think it would be a conflict with what I try to do when discussing it with groups like you.
Do you advise clients to buy it when they ask for advice?
My fundamental advice is this is a VC investment. If you have VC type of risk tolerance, then it's an absolutely appropriate thing to look at. You have to really believe and understand the technology. And I don't mean to come off as a skeptic here, but I really believe in looking at anything with this much risk, you have to maintain an incredibly cautious eye. I'm not a true believer and probably never will be.
So I hold and I sell, and mainly actually just trying to understand different use cases and different applications of it. So I'm more interested in the usability of it than the actual, it's not sort of like a long-term investment. It's more like I'm curious about all the different applications of it.
We hold some Bitcoins. We're, I think, more interested in the businesses that can be built around Bitcoin. And certainly this is, if you're thinking about Bitcoin as an investment, it's an incredibly binary investment. It's either worth something close to zero if this scenario plays out, or if the more bullish scenario plays out, it's worth a lot more than its current price. Almost certainly the price of 2013 is not the correct long-term price. So if you're holding it, it has to be with money you'd otherwise be putting in a highly risky startup and you're completely comfortable losing.
Steve?
I think it's fair to say I'm intellectually invested in Bitcoin. That said, I'm not.
You hold 100 trillion Zimbabwe dollars, and you don't hold Bitcoin.
You never know when it might appreciate. But many of the currencies I cover, I'm not invested in, and along with many of the my colleagues here on the panel, the advice I give to clients is not to pan for the gold, but to sell the jeans to the people panning for the gold.
We'll leave it there. It doesn't get better than that. Thank you all. Thanks to our panel.